that, if you're looking from the further up, you might see some kind of breakout version out here. So there's another one like that, but almost something like that. This was the price that's in question, and this means again a break failure and then coming back, and he's been shorting up again. Apparently we'll keep it simple for the moment and stay with this channel. Again, the channel is slightly on the bullish, and it's it's not a heavy inclined bullish channel, or it's not a steeper one. It's very mild, and it gives you an impression that price wants to stay here for relatively longer. This is what you get when your channels, or your bull channel or your bear channels, are relatively not heavily inclined or not steeper in nature. It usually implies, and if there's a healthy bend towards it, probably about 5720 out here, and I would say 5500, so roughly about 220 to 30 pips range. Usually it means that price is in the mood for consolidation, so it can pretty much carry on doing that. Again, the nature of the play is that this becomes your slightly bigger channel from here to here. That's mean your best positions are somewhere to go short towards this zone or to go long towards this zone. But what if you're interested to trade in between? How would you do that? We can probably go something like that, and probably go something like that. And we have a news impact, I think, coming in about so in about next 35 minutes. You can see a reaction out of probably a break here, which is roughly about actually 4 hours, so it'll happen within this candle. So 56.40, 45, that will be a break area to probably see the price heading back on the higher side here, or a break under 55.70 to see the price probably going and attempting a low towards 5500. And another way of doing it is that excuse me, if I take another chart on the pound, see, let's say 2 hours, we try to bring it closer, and when dealing with breakouts, this is that's your son?
Yes.
Okay. How old is he?
He's going to be 9 months soon.
Oh, okay. So he cannot even express clearly, but he sounds pretty happy right now.
Yeah, he's trying to learn how to talk.
Okay. Well, you'll teach him one day how to trade.
Definitely.
All right. This is again on a British pound. This is not a channel that we're looking in terms of bull or bear, but it's more of a, I would say, symmetrical wedge, more of a symmetrical wedge. But my point being is that this symmetrical wedge, whether it breaks on the higher side or it breaks on the lower side, it comes within this channel T1. Let me do like that so it becomes easier. So this is the channel. This layout of wedge, or symmetrical triangle, whatever you want to call it, it's nothing more than a reference that based on a breakout you can expect this, based on a breakout you can expect down. So it breaks lower on the news, Likely chances is that it comes and tries out 54.95, 5500. It breaks from the higher side, then there's a likely chance that it tries out 57.20, 57.25. So again, the importance is not on this. This is a reference in between to sense the direction whether the price action is likely to hit back on the top, or price action is likely to hit down on the bottom. And how do you, I mean, from here, right where the price is right now, and there's a big news coming up on the, I think it's construction PMI coming up on the pound, and we know at times pound can do 100, 120, 130 pips on its news. Considering that every data that's been released is at least in particular to the labor market would in fact affect the possibility of rate hike on the British pound. So with that in mind, I would assume the data will be, it can cause a lot of movement on the pair. So easily said, if market decides to act strong into the data, it will either break here and try to push in for this, or break lower and try to push in for that. But that does not mean that price will end up going out of the range, because anyways, coming close towards 54.90, 5500 zone, that's a prime buy spot. And I think 57.20 or whatever the number that's coming up to here excuse me, that comes down as a prime selling spot. So in between here right now, you are basically more in terms of playing a breakout, like what I showed you yesterday, and it broke and it started going. And I told you where the minimum lookout for the profit is. Was let's do that same thing again. And I think it just did the minimum target, right? It did not exceed it beyond that.
Yeah.
Yeah, break, came down. We wanted to have a newer lower than this big candle, which was done. And again, we're gravitating in within the same thing. This is a slightly differently done trend line, because apparently by the time we did it yesterday, I think that was this one. Yeah, this is what we did, right? 9605 or 9606, sorry, 5605 or 5605 was the break point, right? And again, for the day, this was the trend line that we were looking for, in case if you're taking out this lows, then it should hit here and go for a buy. So we'll see how it goes today. But with a big news event, I don't think so 30-minute chart would be a good idea to go and judge it out. So it would be better to go and look for either 5640 breakout on the higher side and probably 5570 on the lower side. So that we'll see how it goes on the data. Apparently it's been a bull channel, then of course you're expecting a price to go on the higher side. I have something similar on the pound on the 8 hours here. Yeah, it's almost the same picture, just a different support here. Out there on the 2 hours, what we did was, I think we did this. Yeah, we did this. So anyways, it's still open for 57.10, 15, 57.20. If it strikes it, on the news, and it fails out here, then that's a short zone for the pound. And with 1, 2, almost 3, almost 4, if this comes and tests here and makes a 5 attempt and a failure, I would assume then it's ready to come down to 200, 220 pips on the lower side with extended support. This would be an extended support towards 54.40, 54.30. So basically, from there onwards, pound can be on the drop zone. So that's something that I would be looking towards in for the day. And I just want to show you a little bit more thing. Let's say we take Canadian. and we go on something smaller time frame. We're just dealing with the channel and how it comes into play. So if I have a 15-minute channel and I'm trying to dissect the price, what am I? All right. If this is a good support now, likely turning down into a resistance, then the channel top would have probably. I will leave it like that, something like that. And again, corresponding, if this was support, which looked good, broke, started holding. So short-term plays, scalps. These are the short zone right now, and with almost 1 or 2 hold, it needs to come down more. That's what I think. So where would it come? So let's see if we can plot something on the chart. Yeah. What we discussed earlier is the main channel. Those are 2 or 4 with 200, 300, maybe 400, 500 pips room to run. What we're doing here is nothing more than, using the same concept. We're doing nothing more than using the same concept and applying it on a lower time frame charts. See, this is a raw naked chart. So all you did is use one significant trend line. Of course, I've been doing it for a very long time, so it becomes much more easier for me. Of course, this thing will be covered again and again for you to understand better. But right now, I just want to emphasize on the importance of channels and how to actually play them and how to play the trend line. Of course, they will come as we proceed. I'll be, this is an ongoing. This will be an ongoing carry on the training session where I have to tell you again and again how we're doing it, because as I told you, there are no hard and fast rules. There are only techniques. There are only few pointers, and the main thing that, as I told you yesterday, you're looking for nothing more than streamline, and that's what gives you the best results. I use a spike. I use what I look like the last, matchup with the spike, and price on the higher side came back, retest. So this becomes a good trend line. Retest here, shallow bounce, and a break. So 1 hold, 2, almost 3-4 holds have already been there. If I was to be short on a scalp mode, I would have already done 15-20 pips. But right now with 2-3 holds and almost into the almost 1 hour into the European session, I would assume that my battery is running low. Hold on. How do I change? If I close now, I think it's gonna hold on. Yeah. I would assume that next significant profit point, a continuation on the downtrend now with a breakout, right? So we're considering this as a breakout, and the price stayed hitting a new high, stayed briefly above that. So I think it can easily come down towards 30-80 zone. So people who use this trend line are going short, probably taking a little bit profit, amend this stop, and can look forward for 30-80 for next breakout point. And this is how the channel comes into effect. It does not show you all the noises in between. It just tells you that this is the zone, nothing more than that. It just tells you this is a zone. Now there is no bias attached to it. I told you there is, you don't need to do anything besides waiting, see the response, a break, hold. So if it starts holding here, maybe it can come down for another try, but it holds on here, then you're more than confident that it will come and it will hit 30-80 zone. So either you cash out or from channel to channel perspective, you cash out here. 3080 means you do not have to wait for exact point. You can probably 5-10 pips on the higher side. You can try to cash out. But the point being, how channel comes into play, and this again is a streamline. Of course, the way it has spiked down, there has to be news. There is a bit of a this is not a properly good streamline trend line, right? But nevertheless, it gives you an idea. It gives you a channel that maybe the main trend lines are on the lower side. But if I'm sitting in on a 15-minute chart, then I need to trade based on the 15 minutes. I cannot use the 15-minute charts, and I cannot be looking for 100, 200, 300 pips, limits on my trade. So what I'm doing is nothing more than giving a respect to the time frame that I'm trading onto. But let's say if we do a bigger time frame on the Canadian dollar, how it goes, then this was what I was expecting. Again, it comes down here. Yeah. So $30.97, $30.80 out there, but 15 minutes is inclining. So maybe in few minutes, in let's say next 7-8 hours, it probably will be towards 30.90. So this is just an assumption of, if you see most of my chart, it's got nothing more than assumption of channels, right? So no interest on Canadian dollar, not till I would prefer not till it comes back and gets closer to this point, so I can use the point to go short on the pair, because then I have a range on the lower side. Unless it's breaking below and then start closing again, then I'll let it drop and come back swing, retest it, and then go short to it. So these are just the points, the emphasis on channel, because if you have the channel done in, what you can assume about the channel is that you have a most probably a higher probability range for the price to be traveling into, and when it is when it's right in the middle of the channel, you usually do not do anything. You only track it till the price comes either close to your support or close to your resistance. Again, if you have a bigger view of the pair that